Good morning, everybody, and thank you for joining us for this Monday morning COVID-19 Miller Johnson update webinar. My name is Erik Daly, and I am a corporate and transactional, mainly M&A attorney in Miller Johnson's business section. I hope everybody had a good long weekend and is enjoying the holiday season. Enjoyed Christmas if you celebrate Christmas. I appreciate you joining us the first thing after a long weekend. There were some interesting developments over the weekend as it relates to today's topic, the Paycheck Protection Program, round 2, if you want to think about it that way. Before we dive into the substance of this, it's been a while since there were really any major PPP changes that we did a webinar on, maybe a couple of months. I do like to start off webinar presentations just by reminding myself and others that this is obviously a very difficult time for our clients, for the community. We're showing a lot of resiliency throughout that difficulty, and we are just trying to continue to be helpful in the ways that we can as outside counsel, which are limited in comparison to the work done by healthcare workers and other essential workers. But we will nevertheless continue to bring whatever ingenuity and creative solutions we can to our community to help out. And so we're happy and excited to continue these webinars here at the end of 2020 and as we move into 2021. Hopefully a less eventful year awaits us, but we'll see. Okay, so I'm not going to attempt to cover the entire 5,500 pages of the Omnibus Appropriations and Stimulus Act that was passed by Congress about a week ago, about 7 days ago. But we will do an executive summary of the recent, very recent, as of last night, changes to the Paycheck Protection Program in this webinar. We'll have some other webinars certainly next week on some of the employment law specific issues, and perhaps one other this week, so you can keep an eye out for our client alerts that would have any signups for related webinars based on the new legislation. Why don't we go to the next slide and kind of get into it. Today's topics, we'll do a very quick overview of the Paycheck Protection Program as a whole, although I will assume for this presentation that most people have at least some working knowledge of what the PPP is. Get into eligibility considerations for second loans, or second draw loans as they're referred to in the legislation. Related to that, we'll discuss some expanded categories of new PPP eligible recipients, some expanded categories of forgivable expenses, the tax deductibility of PPP funded expenses. We'll briefly cover the portion of the legislation that superseded some IRS guidance that had come out over the last few months related to deductibility issues. Briefly go through some other kind of potpourri of changes and clarifications related to PPP and other SBA programs. Highlight a couple of points worth mentioning on the forgiveness and audit process front. Talk about timing and next steps for potential PPP borrowers, and then briefly today talk about the Shuttered venue operator grants, which is a new program that is actually separate from the PPP, although there are some similarities, but that program will be administered differently. So we won't talk about it in as much detail today. There's not as much guidance, so we're not quite ready to dive into that, but we'll look at it at a pretty high level. Next slide, please. So very quick overview of PPP. These, as probably everybody knows, these are small business loans that may be forgiven. When I say forgiven, basically the borrower or the small business, if they use the funds in a certain way during a certain period and they are able to retain a sufficient level of employment, full-time equivalent employees, and compensation and wage levels. If you kind of run all the math on that, you use the funds for the right things, and you've retained enough employees, then you can have the loan either wholly or partially forgiven. So some people think of that as converting the loan into a grant if it's used for these forgivable purposes. And even if the entire loan is not forgiven for whatever reason, there are still very favorable terms for eligible small business borrowers, whether it's the first round loans or the second round loans. For example, no personal guarantees, no collateral, very low interest rate, deferral of interest payments. So when the PPP was, originally announced, seems like a very long time ago, back in March and into early April, there was a huge, stampede to participate in the first round of funding, especially because the original amount of appropriations was nowhere near sufficient to fund all of the eligible businesses. Between then and when the PPP closed on August 8th, there were additional appropriations made and some flexibility built into the program, both through SBA guidance as well as subsequent congressional legislation, the PPP Flexibility Act being probably the most significant in terms of additional flexibility. At the end of the day, on August 8th, when the program originally stopped making new loans, there were over 5.2 million PPP loans approved and originated for approximately $525 billion. And there were still leftover appropriations at that point, about $130 billion when the program closed. The leftover appropriations, it's interesting to think about, does that reflect that all the businesses that wanted to take a first loan had done so? Was there some skepticism from borrowers that they might not be able to satisfy the need certification in the first round? Was it the fact that could only get one PPP loan? And I'm sure it's a combination of those things, right, that led to there being leftover funds in the first round. And so a number of the changes that we'll get into, I think will, make it so that there, in my estimation, there will probably not be leftover funds coming out of this updated PPP2, as many are calling it, but we will see if there's as much demand as there originally was, or if there will still be leftover funds. So let's go ahead to the next slide. The latest stimulus bill, which was just signed into law last night after being passed by Congress last Monday night, I believe, appropriates $284 billion to reopening the PPP. And that's for both kind of new first-time borrowers and second-time eligible borrowers. So now this new legislation authorizes what they call a second draw. So that $284 billion kind of headline numbers for both first-time and second draw loans. within that, there are some set-asides for first-time borrowers, for kind of micro small businesses, the very smallest, say with fewer than 10 employees, for the hardest hit businesses that were in the most hard hit, low income designated areas. And then there are also some set asides for smaller and community focused lenders, credit unions and the like, to be able to originate loans. But most of that $284 billion is not earmarked for anything in particular, although there are some meaningful set-asides for those categories. And the new loans, at least where things stand right now, can be made through March 31st of 2021. Be interesting to see if that ends up getting extended again, as the topic of stimulus. If you've been paying attention to the last week, there's still obviously some things that seem to need to be addressed beyond March 31st in many people's view. So it'll be interesting to see if that date gets extended. But for now, the stop date for originating new loans will be March 31st, 2021. And then I think we covered the major points here below, that the bill was signed into law last night after some uncertainty last week and through the weekend. The PPP itself the new PPP provisions did not seem to be the focus of any big objections. You know, there's been steady stream of reporting about some PPP borrowers that people question, you know, should they have been eligible or not. But the major program terms themselves didn't seem to be part of the holdup here. But in any case, it's signed into law now. So we'll keep going with the presentation here. Then, okay. And this is just a bit of a warning slide based on our experience with the initial PPP rollout. First of all, this is an executive summary. We're not getting into every aspect of the new rules and amendments, and we really couldn't, even if we wanted to, because the SBA has been delegated and actually required to kind of fill in some of the gaps here by writing new, let's just say implementing, not implanting, that's my fault, by writing new implementing rules and regulations in the coming weeks. So it'll be interesting to see kind of what the balance is here between a fast rollout of what we'll call PPP2 versus a more deliberate rulemaking guidance and FAQ process. That was a difficult thing for SBA and Treasury to get right the first time through. There was obviously a huge demand and huge amount of uncertainty 8 or 9 months ago when the PPP first went into existence. There's still plenty of uncertainty now, but it'll be interesting to see if they pump the brakes a little bit on the rollout this time, or as some have suggested, they really want to get this open right after the new year. So we'll keep people up to date through client alerts on major developments, but just a word of warning to proceed with caution. You should definitely consult with counsel, your accountants, financial advisors, whoever your trusted advisors are who are knowledgeable about PPP and other stimulus related or tax related issues, to make sure that you're getting the right advice for your specific circumstances. So with that warning, let's go ahead to one of the bigger questions people may have, which is, okay, I already got one PPP loan. I've used all the funds. What are the eligibility considerations for a second draw PPP loan? there will be fewer borrowers who are eligible for a second draw loan than the original first draw loans, although I don't know that the decrease, I don't know how dramatic the decrease will ultimately be in terms of the pool of eligible borrowers, but the key qualifying metrics are the number of employees. You have to have 300 or fewer employees, whereas the first round, you could have 500 or fewer, or in some cases, depending on your NAICS or industry code, you might even be able to have more than 500 employees or have a revenue-based test or somehow otherwise qualify as a small business concern. As written, and we'll see if SBA changes anything with their implementing regulations, there's no reference this time in the second draw loan provisions to potential increase of that 300 number for industry-specific borrowers. So for now, at least on the face of the legislation, for the second draw loan, it's going to be just a flat 300 cap. I'm sure there will still be affiliation rules that apply to that, although the legislation does not go into that level of detail. And in addition to that, the borrower needs to be able to demonstrate a 25% decline in quote unquote gross receipts in any quarter of 2020. You can't use Q4 until next year. If you were applying for a loan in 2021, then you could use Q4 of 2020. But otherwise, any quarter of 2020 compared to that same corresponding quarter in 2019. So, for most borrowers, for many potentially eligible borrowers, I would think the second or third quarter of 2020 is maybe the most likely where they would have that satisfy that eligibility criteria. So you would look at your 2020 Q3 or Q2 gross receipts. Let's imagine that means gross revenues for now, which I think is the intent. If that is 75% or less of what you had in the same calendar quarter, Q2 or Q3 of 2019, and you have 300 or fewer employees, then you're probably eligible, although, you still need to, and I think this is important, you still need to be able to make the various certifications to get a PPP loan, which I believe will still include the need certification. So the way that the legislation is written, I don't believe that this objective test of a 25% decrease in gross receipts necessarily replaces the need certification that you need to loan based on economic uncertainty, et cetera, but is rather an additional qualification. But we'll see if and how SBA interprets and implements that along with the Treasury Department. There are some modified comparison periods for seasonal borrowers and newer businesses. I'm not going to get into detail on all of those because they're pretty fact specific. For example, if you weren't in business in 2020, or if you started your business in mid-2019, it may depend on which quarter you started your business, things like that. But there are ways that there are other available comparison periods to say for both seasonal businesses and newer businesses that may not have that full history of quarterly gross receipts to make those exact comparisons, say to Q1 of 2019, if the business didn't start until Q3 of 2019. And then if you did receive a first draw PPP loan, you have to have used the full amount, or will have used the full amount before you can receive a disbursement of your second draw loan. I believe that the legislation as written leaves open the ability to apply for a second loan prospectively, even if you haven't fully used your first loan yet, but you would have to actually have used it all before you draw, get that second draw. And importantly, the legislation also does not require that you actually have obtained forgiveness of your first loan in order to get a second draw loan. So you can have that and everything. You don't even really need to have submitted your forgiveness application based on the legislation itself. You just have to have used the first draw funds. So we'll see if SBA and Treasury put any additional criteria on that, or if they agree that that is all you need to do to with respect to your first loan, if you're going to go and otherwise be eligible for a second draw loan. The calculation of the loan size for a second draw loan is basically the same as for first draw loans. It's going to be 2.5 times your average monthly payroll costs, subject to a couple of caveats and exceptions, of course. One is that rather than a 2.5 multiplier for restaurants, bars, and hotels, so any borrower that has an NAICS code that begins with 7.2, that multiplier will be 3.5. So those businesses would be eligible for a larger loan potentially than the first time through. They have gone longer. They are perceived to be the hardest hit businesses. And so this reflects that assessment that those businesses in that industry, need an additional boost to their maximum loan size. However, for all loans, including those in the NAICS 72 category, so hotels, restaurants, bars, the maximum amount of a second PPP loan will be $2 million compared to $10 million for the first round loans. And we'll see, I guess, what SBA does in terms of aggregating loans within an affiliate group, and if they impose any additional caps beyond that $2 million cap for multiple affiliated entities or multiple physical locations of a restaurant franchise, for example, where there are some exceptions to the affiliation rules, whether there are any additional caps. We saw in the first go round with the PPP that the SBA and Treasury did impose additional caps to make more funds available to more businesses, even though those additional caps weren't specifically required by the CARES Act or any of the other legislative action related to the PPP. Okay, so in general, there are going to be fewer entities, borrowers eligible for those second loans as compared to the first draw loans. However, there are some newly eligible PPP loan recipients. So while on the whole, there will be a reduction, at least for the second draw loan, a reduction in the number of eligible borrowers, there will be some entities or businesses that will now be eligible for the first time and could apply for a first draw loan, assuming that they didn't already, and in many cases they wouldn't have been eligible, presumably, so they likely would not have received a first PPP loan. The main categories that I wanted to highlight are 501c6 entities. So 501c3s were eligible in the first round of the PPP and remain eligible in the second round. 501c6 entities are things like chambers of commerce, kind of business leagues, and then also destination marketing organizations. So something like maybe a tourism board or like a convention authority potentially being eligible for loans and here again, I'm assuming it'll be a first-time loan in the first instance, if they have 300 or fewer employees and they satisfy certain limits on lobbying, receipts, activities, and expenses. I won't get into all those lobbying and political activity restrictions, but I believe you can have up to, I think, 15% of your receipts and maybe up to $1 million in expenses attributable to those types of activities without being disqualified. But you want to be careful that you're in compliance with those additional criteria if you're one of those types of potential borrowers. And then the other category is, the other major category of new borrower is certain broadcasting stations, newspapers, media, public broadcasters can also be eligible now if, among other things, they have, and here is one of the few references to 500 or fewer employees per physical location, and the loan is used to support expenses related to the component of the station that produces or creates locally focused or disseminates emergency information. So, if you think about a local affiliate or station that has a SEC license to broadcast, but is affiliated with a larger media company, that would make it ineligible otherwise. Some of those types of broadcasting stations or newspapers are going to become eligible now, assuming that they have 500 or fewer employees per physical location and they use the funds for kind of local or emergency information. And then I think just one other category, housing cooperatives are potentially eligible now. I don't think that's going to be hugely relevant for our audience, but that's also a new one that I'll just mention. And then the new stimulus bill highlights some now expressly ineligible PPP borrowers. This is not a retroactive change. So if you have a business that was in one of these categories before and was otherwise eligible, doesn't create a problem for past PPP, a prior PPP loan, but these entities will not be eligible to receive PPP loans going forward. And basically publicly traded companies, lobbying groups, or think tanks. And then this next one, any entity with a board member who is a resident of China, that's going to be an ineligible entity, which just something to be mindful of. It says any resident of the People's Republic of China. So you want to make sure if you're going to apply for a PPP loan, you got to look at your board and affirm that that's not going to be an issue for you. And then similarly, that you don't have, and this is a separate ineligibility test, not one that's conjoined with the board member test, but you cannot have 20% or greater direct or indirect equity ownership by any PRC or Hong Kong-based entities or individuals to be eligible. And then if you receive a Shuttered venue operator grant, you cannot also receive a new PPP loan. I don't believe you're disqualified from getting an SVO grant if you received a PPP loan prior to the new act, but going forward, you'll have to choose one or the other if you're eligible. Okay, there are expanded categories of forgivable expenses in the new legislation, and this is a retroactive change that applies to both existing first draw loans as well as second draw loans, other than it doesn't apply to loans that have already been forgiven in the first round. But for those that are still kind of out there, haven't been submitted for forgiveness yet, or the forgiveness application hasn't been fully processed, there are potential categories of new expenses that can qualify for forgiveness. I'm not sure how many businesses will really need additional forgivable expenses given the availability of the longer 24-week borrowing covered period and the amount of expenses that could be incurred over that period. But if you do, certain operating expenditures are now eligible. The Act specifically calls out software and cloud services for accounting and logistics, for example. So it's not a hugely open-ended category, but there's some additional potential expenses there that may be forgivable. Property damage costs resulting from public disturbances this year. So, if you were downtown business where there was, public demonstration or rioting or something, and there was an uninsured property damage cost, that could be, something that's a forgivable expense. Certain supplier costs, I'm not going to get into all the detail around that. It's not a completely open-ended category, so I wouldn't assume that all supplier costs are going to be forgivable, but some may be. And then probably the most important category, just because I think, a lot of businesses have invested in these types of things, are the worker protection expenditures. And this is a pretty broad category. It would include things like retrofitting workspaces to comply with state or federal guidance, local orders, related to COVID, having expanded testing capabilities, adding some kind of a drive-through component, any sort of, guards or sneeze guards, PPE. So all those expenses incurred to bring a workplace or a location into compliance with an order or to make it a safer work environment. I think there's some ability now to use the PPP funds for those purposes, which is interesting because some of those categories are things, are more capital intensive than just the other types of week-to-week operating expenses, for example, that were generally forgivable in the first round. And so there's some more ability here now to use PPP funds for those sorts of things that may have some prospective benefit going forward, as COVID is still obviously something businesses are dealing with and will be for some time, despite the light at the end of the tunnel with vaccines and other mitigating factors. Hopefully that will come into place in the coming months. As I mentioned, that one is retroactive. So the SBA will need to update the forgiveness applications to allow for disclosure of those sorts of things and how you substantiate those expenses. So we'll have to look out for further guidance and forms from SBA. If you have a first round loan that's already in process for forgiveness and you're expecting full forgiveness, I wouldn't necessarily, in fact, again, you want to look at all these things on a case-by-case basis, but generally I wouldn't recommend you try to amend your application to build in some of these other types of expenses unless it's a really close call on the amount of your forgiveness or if you have doubts about certain of your other expenses qualifying. So we'll see what the SBA says about whether that's even an option when they issue new rulemaking. The legislation does maintain the 60-40 forgiveness split between payroll costs and non-payroll costs. So although there are expanded categories of forgivable expenses, you still need to have at least 60% of your forgiveness amount be for payroll costs. And only 40% can fit into the original other buckets of utilities, mortgage interest, rent, and then now these 4 new categories. Okay, this change, the additional covered period flexibility, is one that I think a lot of people, a lot of existing borrowers and prospective borrowers will be happy to have some clarity on. This is a question that we received a lot and really didn't have a great answer to because the SBA hadn't addressed it specifically. But the new legislation does now specifically say that borrowers will have the flexibility to choose a covered period that ranges anywhere from 8 to a maximum of 24 weeks. So you could have a 12-week covered period if that's what you chose, or a 15-week period instead of that kind of binary 8 or 24-week choice that that you had before, subject to what we thought were some exceptions, but wasn't crystal clear in the guidance. What's still not entirely clear, although I would expect it to be the case that you would choose your period, once you're done spending your loan proceeds, but it's not entirely clear that that is the case from the legislation. So I think the SBA will need to do some rulemaking about it, when you make the selection and if you could change it, if circumstances change, things like that. But there will be more flexibility as it relates to your covered period for spending or incurring expenses that are forgivable. And that impacts, of course, your kind of your FTE measurements and your base period comparison. So that's an important clarification for many borrowers, I know. And it does appear that will apply to both first and second draw PPP loans, other than those that have already been forgiven. I think SBA might need to just clarify that, but that's my read of the legislation. And that could impact some forgiveness application decisions for existing borrowers. Although again, the SBA, I think, will need to update the forgiveness application forms if that's going to be the case. That first draw PPP borrowers who have already taken out loans will have that flexibility. I think there will need to be probably new application form to kind of reflect that. Okay, this is another big one, probably more important than most of the other topics discussed, but it's clear now that PPP funded expenses that would otherwise be eligible for federal income tax deductions will no longer be disallowed by IRS just because those expenses were funded by a PPP loan that was forgiven. And that now supersedes some IRS guidance that had come out over the last few months that took the opposite position, that if you had a PPP loan that you expected to be forgiven, that you couldn't claim deductions for the expenses that were funded by that loan forgiveness. So now, just to kind of summarize as a non-tax attorney at a high level, the forgiveness of the loan itself is not taxable, so that doesn't count as taxable income, and you get to take the deductions, assuming they're otherwise eligible for deductions, even if the loan is forgiven. So that addresses a big concern that people had, that borrowers had about the potential tax impact of the PPP loans. And I think that clarity headed into, before we start 2021 will be a good thing for business to be able to plan around, although some may have already made estimated tax payments based on the prior position. I don't know if the IRS will do anything about that, but at the end of the day, those expenses should be deductible now. And just one note there at the end, it's not necessarily the case that all states need to follow that federal approach, and we'll see what the states do, but at least at the federal level, there's clarity now on the deductibility of those expenses. Okay, real quickly, some other kind of hodgepodge of changes and clarifications. Some of these are important, but just due to time restraints, time limitations today, I didn't want to bog down hitting on the major points, but the SBA must now, based on the new legislation, issue guidance and implement some kind of a program for first-round PPP borrowers who did not max out their loans or may have returned funds based on the constantly changing guidance to what I have dubbed kind of top off their loans or max out their loans. So for example, it ties in well with this next bullet point. Group life and disability insurance costs are specifically called out as forgivable payroll costs in the new legislation. But I know that many borrowers, for example, did not include those as payroll costs when they were calculating their maximum loan amount the first time through. Or some borrowers may have returned funds based on taking a more conservative after the fact view of how they calculated their maximum loan amount. So the SBA will have to implement some kind of a program, and this may take a little while, and the banks will need to be a part of it since they're kind of the intermediary here for the PPP to allow borrowers to get another draw, or another, I shouldn't say draw since that's a loaded word now, but another disbursement on their initial PPP loan to, as I say, top it off or max it out for things that they didn't get when they first went through the process. So more to come on that. There's no details around what the protocol for that will look like yet, but that the SBA is directed to do that. Revisiting that second point, it does clarify that vision and dental insurance costs are eligible. I think most borrowers were probably taking that position anyway. That's what we were advising, but the group life and disability, it wasn't as clear. In fact, it seemed likely that those were not eligible payroll costs, but the new legislation makes it clear that they are eligible payroll costs. Separate topic, the economic injury disaster loan, or EIDL advances that some PPP borrowers received no longer need to be deducted from the PPP loan forgiveness amounts. So you may remember, or back in April or May, even March, your business might have applied for, or you might have applied for an EIDL advance, which were up to $10,000. And the way that the PPP was implemented was on the forgiveness side, that those advances, which themselves were grants that did not need to be repaid, would be deducted from your PPP loan forgiveness, so that the business wouldn't get what some might have described as kind of a double forgiveness for those amounts. But that's no longer the case. And again, the SBA is directed to implement a procedure for those borrowers who did have their EIDL advances deducted from their forgiveness to get those amounts forgiven or reimbursed, whatever the right mechanism is. But basically, that will no longer be an offset to borrowers' forgiveness amounts, assuming they were in fact eligible to receive those advances. And then prospectively on the EIDL front, the bill authorizes $20 billion in targeted EIDL advances through the end of 2021. I won't get into a ton of detail here because there are many objective criteria and statements about how to prioritize which borrowers should be eligible first for this new EIDL funding. But basically, it'll target the hardest hit businesses first and kind of low to moderate income community-based businesses first, as well as EIDL applicants from back in the spring who were not able to receive the full amount that they might have been eligible for because of the appropriations being used up. So this program gets a boost in funding, but it'll initially be targeted and then expand out after those targeted businesses are able to have a window to apply. There are new conflict of interest rules for certain government officials and their spouses. Basically, the president, the vice president, heads of executive branch agencies, and then any member of Congress and their spouses. If there's a business that has 20% or more ownership by any of those people or their spouses, then for their first draw loans, there's going to need to be a disclosure mechanism. And then on a go-forward basis, those entities would be ineligible for PPP loans now that the law has been enacted. And then very briefly, the new law does, this is beyond the scope of this presentation, it does address the availability. There's a big hole in the CARES Act about how PPP loans might work in bankruptcy and if they were even available. The original implementing rules made any entity involved in a bankruptcy proceeding ineligible for a PPP loan. But now we have legislation dealing with that process, so that will presumably supersede the SBA rulemaking. And then so the new law facilitates and extends some timeframes for other SBA relief programs like debt relief for companies that already had Section 7A loans outside of the PPP, for example, increasing the guarantee amount of the SBA for those types of loans for a period of time. So I won't get into all those changes, but there are some non-PPP SBA relief changes as well. Okay, a couple of points on forgiveness and audit process considerations. There will be a new, very simplified forgiveness process for PPP loans with an original principal amount less than $150,000. I presume that the way that will be implemented is that you'll have to factor in affiliated borrower loans, although that is not specifically required under the legislation, but that is how SBA and Treasury have generally implemented these sorts of expedited forgiveness processes over the last 8-9 months. So the new process for those smaller quote unquote borrowers is basically just going to be a one-page certification and attestation that the borrower has complied with their program rules and collecting some information about the number of jobs that were retained based on having received the loan and how much was spent on payroll costs for those loans. And then there are some record retention requirements, but SBA is directed to make this a one-page deal, which is a little ironic considering the new legislation was 5,500 pages long, but this one will be one page. And then separate from that, within 45 days, the SBA has to report to Congress on its audit plan for conducting reviews and audits of forgiveness applications. So they need to, there have been a lot of folks who justifiably have had concerns that there's not a lot of transparency and it's a very opaque forgiveness process. And what is the SBA looking at? They're collecting all this information for the larger borrowers above $2 million. What's the plan? And so there's now a requirement for SBA to report to Congress about that plan and then provide monthly updates thereafter about how they're implementing it. Okay, so timing considerations. This one changed last night in the afternoon. It had not been signed into law yet, but now it has been. SBA, nevertheless, still has to issue all these new rules, create new forms, and work with banks and lenders to reopen the PPP and implement these changes. Banks, for their part, they're in the midst of processing loan forgiveness applications for the first wave of PPP borrowers. They're going to have to if they want to participate in the next round of originating PPP loans, they'll also have to work with SBA and Treasury to implement the new program and rules, which hopefully they'll collectively everybody will have learned some takeaways from the first round through, and it'll go more smoothly this time. But there are meaningful changes, so that will take some time to implement. And touched on this earlier, but it'll be interesting to see, given how bumpy the initial PPP rollout was, with the constantly changing rules and FAQs, whether SBA will prioritize speed versus, more deliberate approach in implementing and reopening PPP2. So we'll obviously keep people posted as important updates come out of SBA in that regard, or from Congress. Okay, and then as I mentioned at the outset, the Shuttered Venue Operator Grant Program is technically not part of the PPP framework, although it has a lot of the same characteristics at the end of the day. Substantively, it works similarly in terms of effectively being a grant if the funds are used appropriately, or I should say I'm appropriately, but on certain expenses during certain time frames. I'm not going to get into it in detail now because it's really not administered the same way. So unless something changes, I don't believe banks are going to be involved in implementing this because it's not technically a loan like the PPP is, but rather a grant from SBA. So I think this one will probably roll out on a slower time frame, if I had to guess, than the PPP2, just because SBA will have to put up, kind of stand up a framework for making these grants. And also the grant program has sort of waves of priority. So initially grants will be made to eligible borrowers, I believe, who had like a 90% or greater decline in receipts, and then kind of expand out from there. So this one will have more of a gradual implementation, and frankly, we're still getting our arms around the differences in how you calculate your eligible grant amount, because it's not a multiple payroll cost for this program. It's a different calculation. But if you fall into one of these categories of like a live venue or a theater producer, movie theater, et cetera, and you may be eligible for a PPP loan under the new rules, you may just take some time to compare that against, what this SVO program is going to look like, because you can't do both. So we will follow up, I'm sure, with a webinar and or a written client alert with more details about the Shuttered Venue Operator Grant Program. But for now, just note that's not a part of the PPP. And if you're eligible for this, you want to think carefully about, which route you take going forward. All right, so to wrap up before doing some Q&A for a bit, hard hit small businesses, you want to look at your employee calculations, of course, and if you haven't already, collect the revenue or gross receipts information that will be needed. For larger borrowers, it looks like you'll need that information on the front end when you apply for the loan. For loans below $150,000, I believe the revenue qualifying, 25% reduction in gross receipts information can be provided on the back end or the forgiveness stage, if you will. But you want to be prepared in case SBA and lenders do reopen the PPP quickly, which is a very live possibility. Probably will be the case. Continue to follow legislative and regulatory developments. Probably not much will change in the near term on the actual legislation, but regulatory rulemaking, FAQs, et cetera, to make sure that you're up to date on how the new legislation is being implemented and interpreted by SBA. And then just a couple of warnings. Probably people are aware of this, but just a reminder as we move into this next phase of the PPP that a lot of this information can and will become public either through government reports or through Freedom of Information Act requests. So be mindful of that. And then, for any false certifications, misuse of funds, misrepresentations to lenders or the government, those can be severe, including potentially criminal sanctions or fines. So, the process here is important in making sure you're eligible. In some cases, it'll be extremely clear. In other cases, maybe not as much, but making sure you've gone through that assessment and followed the right procedure will be important. So with that, I'm going to go to the next slide. I think you can go to the next slide. There's my information if you want to get in touch with me. You can kind of take a look at information about our resource center for back to work resource planning while I answer some of the Q&A here. I'll do my best. Some of these are potentially still unanswered, so just bear with me for a moment. When will borrowers be able to apply for the second draw PPP loan? We just don't know yet. I think, however, one of the senators on the Small Business Committee, Senator Cardin, maybe said that, it was reported that they said that they wanted to have it up and available shortly after the new year. But how realistic that is given the overall timing here and the holidays and the delay and getting the bill signed into law, I'm not sure. So we'll see, but we don't have an answer to that right now. Does the bill define quarter in the traditional sense, or what is September to November 2020? Yeah. So here the question is, as I interpret it, are we talking about calendar quarters or some other kind of 3-month period? And the legislation refers to first, second, third, and fourth quarters, so presumably calendar quarters. And I think that's probably how SBA will interpret it and implement it, but we'll see. It's possible that the SBA will for example, if there are borrowers that have a different fiscal year that doesn't align neatly with that framework, will there be an exception? It's possible. We certainly don't know for sure. So in the first instance, I'd assume it's calendar quarters. And I apologize in advance. There are there are quite a few questions here. I'm not going to be able to get to all of them, but I'll stay on as long as I can. There were reports in the news that the $2 million second draw cap would be aggregated with the first PPP loan. Is that correct, or is a business eligible for a second draw loan up to $2 million? I believe it's the latter, that even if the business originally had a loan above $2 million, that they could still be eligible for a second loan. It's possible that there will be regulatory limits on that, or, it's certainly possible that I misread the final legislation. I haven't seen it interpreted that way, but I don't believe that is the way it is written in the legislation, but we'll see what SBA says as they interpret the act and implement it. There's a question about any new restrictions related to private equity owned or managed businesses. No, there's really nothing specific that addresses how private equity ownership or management would ultimately impact forgiveness or any other aspect of the loan. There's a question, I think I addressed this, but the question may have come in before that, but are the alternative definitions of small business concern still in effect? For example, businesses that had less than 15 million of tangible net worth and an average net income of less than 5 million. For first-time borrowers, I believe the answer is yes. So if there's a business that is out there that didn't get a first-round loan yet, but wants to now for whatever reason, I believe that they still could rely on that. But for a second loan, I don't believe that that will be available. It'll just be the 300 employee cap, but and then the 25% decline in revenue. But we will see if SBA takes a different view in implementing the new legislation, if they expand that to include more small business concerns. We'll do a couple more questions. 9:01. So thank you everybody for spending the time with me so far. I'll stay on for another 5 minutes or so. Okay, what is the good question? What is the base period for determining the payroll cost used in the loan amount calculation? If we receive a first draw PPP loan, can we use the same base period calculation, assuming we are eligible for a second draw? I believe the answer to that question is yes, you could use the same calculation if you use 2019 as your base period for the first loan. But basically your choice, as I read the legislation, is it's either 2019 average monthly payroll cost or average monthly payroll cost over the 12 months before the loan application. So if your original application was based on 2019 calendar year, I think you could use that again. But if you did it based on the prior 12 months at the time of your initial application, I'm not sure you'd be able to reuse that calculation. You would need to update that, I think, for the 12 months prior to your second draw loan application. But that's probably something that, again, hopefully we'll get a little more clarity as the SBA issues implementing rulemaking and loan applications. Good question. There's a question about, for the flexible covered period, so the ability to choose some time between 8 and 24 weeks, is there additional flexibility to delay the start until after the PPP loan is received? I do not believe so, not on my reading. I think it's still tied to when so your covered period under prior rules, which I'll take as sort of the default here, started when you got the first disbursement of your loan. I think that will still be the case. You just have more flexibility to choose the end date between the 8 and 24 week period. Are there any restrictions for the second round of PPP if you received a Main Street loan, Main Street Lending Program loan? It's a good question. I don't believe so, but that may impact your need certification. So there, may be an indirect restriction, but there's nothing specific in the legislation itself, I believe, that would make a borrower ineligible solely because of receiving a Main Street Lending Program loan. But it could impact your need certification if you have availability, for example, on a revolver that was originated or expanded as part of the Main Street Lending Program. There was another question here about the 300 employee max and whether there's any flexibility there based on NAICS code as there was in the first round. I do not believe there will be. Again, for the second draw loans, it doesn't appear that there will be any additional flexibility like that. Again, for a business that hadn't gotten the first loan yet, but now wants to do that because the PPP is reopened and has funds again, I believe that type of business for its first loan probably could rely on that. We'll see if the SBA affirms that in their rulemaking, but for the second loan, there's no reference as there was in the CARES Act for the first round of loans to potentially allowing an increased employee count based on NAICS code and the SBA size tables. is the new simplified forgiveness application retroactive to the kind of first wave of PPP loans? Yes, I believe it should be. So if there's a borrower that has a loan below $150,000 and you're kind of on the cusp of applying for forgiveness, you may want to wait until that new one-page process is completed and implemented, because that will be a much simpler way to apply for forgiveness if your loan is below that $150,000 threshold. There's a question here about the deadline for submitting loan forgiveness applications. Has that been extended? So the question, I think this question starts with maybe a mistaken premise, which is that there's an upcoming deadline for submitting forgiveness applications for first round loans, which is not the case. There's no near-term deadline for that. But no, there's been no change in terms of deadlines for submitting loan forgiveness applications. Really, there's a pretty open-ended time frame for doing that, even for first round loans. If you don't submit your loan forgiveness application within a certain time frame, interest will become payable on your loan, but you have quite a while to actually submit your loan forgiveness application. Okay, well, thank you all again. There are a few other questions in here that are somewhat situation specific. One last question, is Nora Johnson aware of any large borrowers above $2 million from the first round who have received word that their loans have been forgiven? So I'm not personally aware of that having happened yet. To backtrack a little bit, those borrowers who had loans above $2 million only relatively recently started providing responses to those Form 3509 necessity questionnaires. And I don't think that SBA has really, as far as I know, reviewed those to the point where they started issuing final forgiveness determinations. But it may just be that I'm not getting word back of that, or others have had business clients who have gotten forgiveness. So I'm not aware of it. I think it's still very much in process for those larger borrowers. That won't impact eligibility for the second loan. However, again, you don't need to have had your first loan fully forgiven. You just need to have used up all the funds before you get a disbursement on a second loan, assuming you're otherwise eligible. All right. Well, thank you again, everybody, for joining today. We will continue to put out alerts and webinars as needed when we get more information. We appreciate everybody, all our clients and other webinar participants, for your contributions to community and keeping people employed and keeping your businesses going as best as possible under the circumstances. So feel free to reach out if you have follow-up questions or want to talk about anything. And in the meantime, if you don't hear my voice again before the new year, have a happy new year. And we'll look forward to continuing the dialogue going into 2021. Thank you.